Yo, what is good, guys? It's me, Decrypt, back with another video. Today we're gonna be covering candlesticks. You know, those long, schlong things that get you paid in the day trading, uh, the charts, whatever you want to say, whatever you want to call it. I'm gonna go ahead and crack open a good one. So I hope you guys don't mind me sipping on a Celsius while I record this because I need it. But anyways, let's get into candlesticks. So candlesticks, if you don't know, is what makes up the stock market, right? So of course you have all these candlesticks here. We have some big ones, we have white ones, we have blue ones, we have small ones. We have candlesticks of all shapes and sizes. We don't judge here. We are very welcoming and we allow all sizes of all sorts. So don't feel discriminated. We're all human at the day traders at the end of the day. But I need to teach you how candles work, right? So we have a green candle and we have a red candle. I know these are not colored. I'm teaching you guys to the best of my ability, but this is really simple information, so it's really not even that serious. I just don't know how to draw. Anyways, on green candles, so obviously you have the candle body here, right? So this is where all the volume's at. When you have a green candle, normally price is going to open up below where it closed, right? So price opened up down here. You have the low and then you have the high of the candle. So you have the wicks, you have the low wick, and you have the high wick. All this means is that price opened up here, dropped to that low, and then ultimately ended up coming up and then closing here, right? Same thing to the high. That just means that price came to this high and went to a high of 631.03 and then closed at 630. And it created this green candle, right? And it's the same thing to the opposite side on a red candle. The red candle means that you opened up and price closed below the open, right? So you open up, price sees, goes up a little bit, sees this high, and then drops below the open, and then continues lower and ultimately closes at 628, but it saw the low of 628.15, right? And closed at 628.38. So this is how a candle works, right? So you just, when you have a green candle, it closes above the open. When you have a red candle, it closes below the open, right? And these are just regular candles. Now we're going to start getting into the wicks because the wicks are also really important. What you're going to see a lot is candles like this. You're going to see a candle like this. You're going to have a really small body, and then you're going to have a really large wick, right? What does the wick mean? So we understand how the candlestick works. We know that, pretend this is a green candle. This is the open. This is the close. And then we have the high and the low, right? I'll probably just do this so it's easier. High, low, right? So we have the high. Now I'm gonna make that a little cleaner. So we have the high and then we have the low down here, right? So we have a high and a low. All this means is that price opened up and it closed up here, right? But you see that price tried to drop down to 627. So this tried to be a red candle and then buyers stepped in. Whenever you see this candle here is called a shooting star. Normally you'll have this at the bottom of a downtrend, right? So if the market's downtrending like this, boom, 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 boom. Normally, whenever you're at the bottom of a downtrend or you're looking to reverse on the market, that's when you'll have shooting stars because you're currently in a downtrend. You have a lot of sellers, but buyers step in, and ultimately, this is a signal for a reversal, right? And then also, another candle is going to be the opposite of this, right? So you're going to have a candle that looks like this. You have the body down here, you have the wick, and then you have the like this. So normally you're going to see this at the top of a trend. So if you're uptrending like so, and then you hit a resistance, normally you're going to see a candle like this because you're uptrending, you have a lot of buyers. You open up here, right? You're green, and then it rejects and ultimately closes red. This is a signal for a reversal as well. And it normally happens at the top of a trend, right? And then this is the last important candle that you're going to have to learn is a doji. And it's really just as simple as price being able to decide what direction it wants to go. So when you have candles like this, normally means that market isn't moving anywhere. It's indecisive and it's in a range. It's just moving up and down. It doesn't really have a trend. You want to trade candles that look like this. These candles that have bigger bodies are always going to have more volume. These candles here show you signs of reversal, but it's not necessarily anything that you'd want to take a trade on because price is still indecisive. You know, you can have a reversal candle at the top of an uptrend, and then you could still have a candle that completely, you know, it just continues going higher like this, right? You have a green candle. So you can't necessarily take trades based off of candles, but you do know what they do, how they work, and what it means whenever they do appear. So you can start to use these, you know, confluences in order to take your trades. It's going to give you more confidence just understanding how they work, right? Because a lot of people, the reason they don't take day trades or the reason they lose confidence or the reason they sell too early is because they have all these subconscious thoughts in the back of their mind, right? And my job is to help you eliminate those subconscious thoughts so that way whenever you're taking the trade, you see the setup, you're on your phone, you execute, you're in and you're out, boom, you're done. That's what you want to do. You don't want to be thinking about like, oh, how much money should I go in? Am I sure this is going to continue uptrending? How do I know? Da 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 da. Is it good volume, bad volume? Understanding these things is going to eliminate all those questions, and you're going to be so much more fluid when it comes to taking day trades, right? So, you know, this is very boring, but it's very, very important information because now, whenever I'm taking day trades, I don't have to think about, oh, is it doji? Is it shooting star? Are we reversing? Da da da. I see it happening, and I know what that means, and immediately I process the information. I don't have to sit here and think, okay, this is happening. Boom, boom, boom. Day trading's real fast. So this is why you have to learn these things and lock it in. And then that way, in the future, you'll be able to take day trades, right? So those are the candles. And that's what they mean. Those are the most important ones. So now we're going to look at the market, right? Let me remove all these. Bang. All right. So now we're going to look at the market. As we know, bang. As we know, oh my God, I'm so drunk. The market still moves up and down, right? So we're continuously making higher highs and higher lows with inflation because as long as inflation keeps growing, the more expensive things become, including stocks, right? It's not just, you know, it's not just eggs and milk that get more expensive. It's everything in general, right? Which is why billionaires and the wealthy understand, you know, like whenever we started dropping interest rates in 2022, the market started dropping. And then whenever they tapered them in October, it just so happened to be the bottom of the market. And then we continued higher, right? And then, you know, interest rates directly correlates with inflation. So use that information as you will. We'll have more videos in the future about monetary policy, so don't worry. But that's just some small sauce. Right now I'm looking at some daily fair value ups. Again, losing track. I'm already focusing on trades for next week. But anyways, now you know how candles work, right? And you can kind of read candles. It's kind of like there's no real way to read candles, but you can obviously tell when they're in ranges. You know, it's like when you see highs and lows, like we have a high there. If we were to take all this out, we have a high here, and then we have some lows down here, right? This is the lowest low it saw. But you can obviously tell that it's in a range. It's not, you know, it's not cleanly breaking highs with a lot of volume. You can see that it's just kind of teetering around it. So it's not necessarily anything that I'd want to take a trade in. And especially, you know, like if we fast forward, you can see that the market starts going back down into this range. So yes, you could trade in between this. Like, you know, if you're trading the downtrend here, or there's an up, we're obviously uptrending, right? So if you're playing this range, you'd want to play the break of structure. We haven't got to the strategy yet, but you'd want to play something like this. I don't know if it's going to play out or if it's going to retest. It looked like it probably got pretty close. If we go into smaller time frames, yeah. So I mean, it had a chance to retest. Looks like it tried to retest there, but never really had a clean retest. Anyways, yeah. So those are candlesticks, and you could tell, like if once you go into smaller time frames, this is where you're going to be day trading, right? So when you go into smaller time frames, you can kind of tell when volume kicks in and when there's no volume present. So a lot of times people will be taking trades, but the candles are moving like this, right? If you have large volume followed by small candles, that's fine, right? But if your day is just candles like this moving sideways all day, this is what you don't want to trade. You want to stay away from that. You want strong volume, right? And normally you can see these moves on larger time frames, like 15-minute. You can tell how big these candles are compared to like these little baby candles throughout the day, right? Look how large this move is compared to this. It's just sideways. So you want to pay attention to these things. You're going to have a lot of candles that are engulfing, right? So you're going to have a candle like this candle here that also signifies a reversal. So you have this red candle fully engulfed by this green candle, which just tells you that buyers are in control. And then if you can see, we're at lows. So obviously buyers are stepping in this area. And just like I showed you guys earlier, look at this candle here. This is a shooting star. You have the green, you have the open, and when as low as here, buyer stepped in, it closed green, and then now you have an engulfing candle ready to reverse, right? You broke highs, break a structure with the fair value gap. You could take this trade, got the retest, and obviously continued the uptrend. So just using that information there with the candlesticks that you've hopefully learned so far, uh, you're going to be able to take trades like this, just understanding, oh, volume's really low. We have a fair value gap here. We're breaking these highs. We can take this trade, but it's teetering. I'd rather just get out the trade than to, hold it, especially if I see a candle like this where I get false hope and then it just goes back down on break even. Okay, you know what? Perfect risk to reward. Take a small baby loss. That's a good, target previous highs. Boom. Whatever. That's a good loss. Don't even have to focus on it. But yeah, regular candles, doji candles, shooting stars, and hammer candles. The hammer candles are when the market tries to go up and immediately rejects, and then shooting stars are the opposite way. When the market tries to go down, immediately rejects and bounces right back up, closes green, right? Doji candles are little candles like this, where they're really indecisive. You don't know, they don't really know which way they're going. So when you have candles like that, you just don't really even want to trade. It has wicks on both sides. But you can obviously see, the wicks will tell you what direction the market's going in. The larger the wicks, that's, where volume is present. So if the wicks are stronger to the upside or on the top side, which you'll see a lot in a downtrend, see how big the wicks are on the top compared to the bottom. Obviously, yeah, you do have wicks, at the reversals, but look at the wicks at the top. Boom, large wicks, large wicks, large wicks, large wicks. At the top of the moves, you're gonna have large wicks at the top, especially in a downtrend. In an uptrend, you're gonna have large wicks at the bottom, especially in an uptrend. So, so that's just reading the candlesticks, right? It's really not too complicated. And also, if you want to learn more about like if you want to go fully into detail about the candlesticks, you can. It doesn't really benefit you understanding, like all these different terminologies because a lot of people are going to call them different things even though they have the same meaning. They have the same purpose. So I just call them candlesticks. I stick to doji, shooting star, hammer, the simple stuff. So I don't really call it anything else. I know a lot of people call it like PO3, PD array, 4 hour, this and that. That doesn't matter. It doesn't work. Whatever's on your screen is what you trade. So if you're trading anything but that, you're probably losing. So yeah, it's been Decrypt. I hope you guys learned about candlesticks, and I hope I made it clear so that way you guys can continue banking and making more money in the stock market. It's been Decrypt. You guys take care. I'll catch you guys in the next one. Out of here.